If you were born before 1961, the moment you turn 65, the law pulls you out of a category of bills and taxes that you are statistically still paying in full. This milestone legally reclassifies you in the eyes of the federal government, your state, and your county, changing how these agencies are required to treat your finances. Here's the catch that costs retirees thousands of dollars. While these agencies are legally required to offer you different rates, the system operates entirely on an opt-in basis. Nobody at the county is going to mail you a check, and the agency that has collected from you for 40 years will never call to tell you to stop paying. People often talk themselves out of this money based on a pair of myths. Some assume exemptions are strictly for struggling, low-income retirees. Others assume tax breaks are reserved for the wealthy with sprawling estates and expensive accountants. Both assumptions leave real money on the table. Think of your monthly retirement budget as an invisible ledger. Today, we are going to audit that ledger to uncover 5 specific overcharges hiding in plain sight. We are going to look at the exact bills younger people still owe that you no longer do. Failing to recognize this bureaucratic gap has severe consequences. You are legally entitled to these age-based exemptions, but ignoring the required paperwork turns that entitlement into an expensive, lifelong financial penalty. A massive segment of retirees routinely overpays their federal income tax every single year. This happens because they rely on outdated standard deductions and prepare their returns exactly as they did in their working years. Following tax legislation signed into law in July 2025, the government established a temporary relief measure for seniors through the 2028 tax year. This results in a new bonus deduction of $6,000 that applies to every American age 65 or older. This reduction applies automatically, regardless of whether you take the standard deduction or itemize your return. But the tax code also gives every filer over 65 a second, pre-existing standard deduction. Watch as a second distinct segment is sliced off our chart. This older deduction legally stacks right on top of the new $6,000 bonus, stripping away even more of your taxable income. Because generic tax preparers often leave these specific age-based boxes unchecked, seniors end up paying taxes they don't owe. By over-withholding from their pension and Social Security checks year after year, they are effectively providing the federal government with a perpetual interest-free loan. The largest source of invisible overpayment hides in your housing costs. Most homeowners falsely assume that property tax relief kicks in automatically the day they buy a house or the moment they turn 65. This 3D geometric house model represents your total property tax burden. The bottom block is the base homestead exemption, which takes a flat chunk of your home's assessed value completely off the books before the county calculates what you owe. When that block slides out, your bill drops. But you have to file a manual one-page form with the county to claim it. The middle block represents the senior exemption. This stacks directly on top of the base homestead exemption the year you turn 65. In more than half of the states that offer this, there is absolutely no income test required. Age is the only qualification to make that second block disappear. The roof segment is protected by the senior assessment freeze. When you file for this, a solid ice-like shell forms over your home's assessed value. The line graph spiking aggressively upward behind the house shows your neighborhood's market value soaring. Because of the freeze, your taxable value is permanently locked at the age you applied, ignoring that market appreciation entirely. This tax freeze provides the ultimate defense against being priced out of a rapidly gentrifying neighborhood. It also indirectly protects renters. Since landlords pass property tax increases directly down to their tenants, freezing those taxes across a community stops rents from climbing at the same aggressive pace. Now let's audit your healthcare costs. The Medicare Part B premium is highly deceptive because the money is siphoned out of your Social Security check automatically. It vanishes before the funds ever reach your bank account, causing many retirees to forget they are even paying it. If your income qualifies, your state offers Medicare savings programs. These programs move beyond simple discounts. They require the state to pay your Part B premium outright, removing the cost from your ledger entirely. People see the word assistance and immediately assume they make too much money to qualify. In reality, the income limits are much higher than most assume. Many states have eliminated the asset test entirely, meaning your savings account or your paid-off house will not disqualify you from approval. Applying for a Medicare savings program often triggers an automatic enrollment in a parallel program called Extra Help. This drastically reduces your prescription drug deductibles, copays, and Part D plan premiums. A single screening phone call secures two of the most lucrative healthcare cost breaks in the federal system. For the average retiree, that returns roughly $200 a month directly back into a fixed income budget. Consider a 72-year-old widow named Margaret. She lives on a fixed income in a paid-off home that has quietly doubled in value over the years. An audit of Margaret's ledger revealed she was unknowingly suffering from 3 invisible leaks. She was paying the full Medicare premium every month, carrying an unfrozen property tax bill on an appreciating house, and suffering from over-withheld federal taxes because her preparer missed the age-based deductions. She filed exactly 3 forms: a Medicare Savings Program application, a property tax freeze with her county, and a corrected federal tax return. Without selling a single asset or changing her lifestyle, she kept hundreds of dollars more of her own money at the end of every month. Margaret was not gaming the system. She was legally reclaiming wealth she had earned over a lifetime of responsible financial behavior. The law explicitly stated she did not owe that money. To stop these leaks yourself, you need to make 3 zero-cost moves. Call your county assessor and ask for the Senior Exemption and Assessment Freeze forms by name. Call your local SHIP office to screen for the Medicare Savings Program. And utilize free IRS-certified volunteer programs like AARP TaxAid to ensure your senior standard deductions are applied correctly. Being legally exempt and actually keeping your money are 2 very different things. The government will never build the bridge between the two. You have to file the form and build it yourself. If this information helped you, send this video to one person you know over 65 and help them reclaim their own invisible ledger.